Happy VA Wednesday. So today we're going to be talking about what veteran home buyers can expect in 2025. I was thinking about this video and I actually started to get really excited because I think 2025 is going to be a super fun year for veteran home buyers. Now, did I like 2024? Yeah, I did. But I think 2025 is going to be even more fun. So we're going to be digging into it. Now, I want to start with something that I think a lot of people don't know, but they should. The first thing is this. One of the biggest issues in our country is affordability. We all know that. Well, if I'm pricing out a loan and I have a conventional home buyer here and a VA home buyer here, what I've been seeing recently is conventional, I'm going to be in the 7, right about 7, high 6s, low 7s, somewhere in there. VA, I'm going to be in the low 6s. And in my experience over the last few years, what is the range I usually see? I would argue that you should expect as a veteran that your rate will be at least 0.5% lower than conventional, and in many cases as much as 1% lower. That's the thing a lot of people don't realize. I think that veterans are like, oh, well, VA is zeroed down, but they don't necessarily know that the interest rate should be so much lower than conventional. The reason is there's a lot of lenders that pretend like, oh, they're the price the same. Oh, it's not true because they make more money. The higher the rate they give you, the more money they make. So if they tell you that VA is at 7%, they are stacking up gold coins, my friend, right? So I need you guys to know that. With VA, your interest rate should always be lower than conventional. Always. So important because this plays into affordability a lot. The reason I think 2025 is going to be super fun again for veterans is because I don't think it's going to be a crazy home buyer competitive year. I don't see anything coming. Now look, could something crazy happen? It's America. It's 2025. We started off with some interesting stuff. Sure. But based on the forecast, based on what we're seeing in the economy, is there anything that's giving me an indication that rates should drop dramatically? No, not at all. If anything, they could go up even more. So from the competitive perspective, I think you're still going to have a lot of home buyers who are dealing with these 7% rates, who are dealing with having to pay mortgage insurance, who are dealing with coming up with down payments. I think they're going to sit out. And, do I think that's smart for them? No, but I think we're going to see a lot of that. And that gives you guys the upper hand. It gives you more houses to choose from, and it gives you a chance to take advantage of the market because you're playing on a different field. The affordability level between a 6 and a 7, it's a different game. It's a different game. So that's really important. I want to make sure you know that. The other thing is that when you're in a market that's less competitive, you can negotiate more. So asking for the seller to pay closing costs, asking for the seller to pay a little bit more than closing costs so that you can pay off debt. I think we're going to be seeing a lot of that this year. It will depend on the negotiating ability of your real estate agent, but it's important that you know with VA, we can ask the seller to pay all your closing costs plus up to 4% towards debt and prepaids. So that's important because sometimes I'll be going over a payment with someone and they'll be like, I wish it was a couple $100 lower. And I'll look at their debt and I'll see like a credit card or something and maybe it's $3,000. And I'll be like, well, if we get that credit card paid off, then you would have more money to put towards the house. With VA, you can negotiate with the seller for them to pay that. It's one of those things a lot of people don't know. And I'll be honest, guys, I didn't even know it for the bulk of my career. But once I figured it out, I was like, let's go. And this is a great market for that. I think this is a great market for if you're a veteran and you're looking at buying your first multi-unit. I think with where rates are in the conventional realm, investment rates are still staying a bit higher as well. I think it's a great opportunity time. I'm going to be looking myself this year as an investor because, look, I'm a lender. I know that rates, they change, right? The key is to always make sure you can afford the payment, even if the rates never go down. But I think this year is going to have a lot of opportunity, and I'm excited. So I'm excited for you guys as well because you're coming into it, 0 down payment, no monthly mortgage insurance, and a much lower rate than what other people are getting because you're VA. So that's great. Now, what is one thing that you need to be aware of? Buyers brokers agreements. This is new since 2024. This came into play at the end of 2024. It's in most states. It's not in all, but it's in most. So what is it? Well, basically, before you go out with a real estate agent, they're going to require you to sign a buyer's broker agreement. What that is that's a contract between you and them, which lays out how much they get paid and how long you're exclusive to them. Both of those points can be negotiated. Now, if you're like, well, wait a second, I've never paid for a real estate agent before, that's because up until last year, you could not as a veteran. As a veteran, they couldn't charge you anything. They couldn't charge you a transaction fee. It was a dead no. That changed. So you want to be mindful about that, and you need to have that conversation with your real estate agent. That I have yet to have a client that wants to pay a real estate agent's commission. Could it happen? Sure, but I have yet to see it. It could happen. You're going to need to have the conversation of, hey, I expect you to negotiate with the seller for your commission. And if they say, well, I'll only show you houses where they say they'll pay us, walk away. And the reason I say walk away is they've shown you their true colors. They're lazy. They're lazy. If they're not going to negotiate for that, are they going to negotiate for a lower price? Are they going to negotiate for closing cost credit? Are they going to negotiate for that extra money if you want to pay off debt? Or are they just going to be like, oh, seller said he'd pay me $15,000 and he wants $500K. So let's write $500K. Heart. Like, I know my voices are terrible when I do impressions, but that's just how I visualize it because I find it infuriating. So you're going to want to be talking to your agent about, hey, like, you're going to negotiate with the seller for this. But at the same point, look at what they're trying to charge you. You know, if there's transaction fees or anything else, all of that's negotiable. So you need to know that. Important, because this is the next question. Well, Jennifer, can you just read it for me and tell me if I'm getting a good deal? No. I'm not a licensed attorney, and getting anywhere near the commission real estate drama, I could end up losing my license. It's not worth it because the real estate agents, the DOJ, lawyers, they're all like bickering about right now. No, but you need to know that you can negotiate it. Go on chat boards, go on Reddit, you know, and make sure you're working with an agent that will negotiate with the seller for their commission. Now, I do think there could be some exceptions to that. I do think in really expensive areas, like I'm thinking Virginia, parts of California, where there's more competition and you're looking at like a $2 to $3 million house, may you need to pay your agent? Potentially, you know, but am I expecting that in the bulk of America? No. Okay, what else? Well, so if you've already used your VA loan and you're like, Jen, I called you last year and I just didn't have enough entitlement left if I want to keep this house to buy a new one at that price, call again. Loan limits went up. So whenever loan limits go up, if you have used entitlement, it means what you qualify now went up too. So that's a very good thing. Now remember, if you haven't used your entitlement or it's not currently in use, there is no loan limit. But for some of my investors, and I say investors, but generally it's a veteran who bought a house, lived in it for a year or 2 years, maybe they bought it on base, you know, went to another base, turned this one into a rental, did it again and again and again. They're always looking for that extra entitlement. So yes, loan limits went up again, so you will have some extra entitlement. Overall, are there any big guideline changes to VA? No. Once again, it's going to depend on the lender you're working with. So for instance, we don't have a minimum credit score. We look at credit history. Some lenders have minimum credit scores. We don't. You know, it's going to depend who you talk to. You want to make sure, like, look, you could save yourself a lot of time and just call us. I used to always be like, make sure you're working with someone who's experienced. But it's like, we get so many calls where someone's like, Jen, I did all this research and I ended up with this lender and now they're charging me this. And it's like, just call us. 786-933-2077. My team's ranked the #1 VA team in America, and I think we're going to take that for last year as well for purchases. So this is what we do all day long. This is what we love to do. We love educating real estate agents about VA so they take care of our veteran buyers. We love protecting our veteran buyers and making sure that they're not getting ripped off or in predatory positions. We like helping people plan. You know, if your goal is to buy 6 houses over the next 10 years, let's do a plan. okay? And as always, you can jump on the calendar, grab a spot. We're here to support you. So please reach out, but I'm excited about 2025. I think this is great. I think that as long as rates stay in this range, beautiful. And look, if rates go down at some point, cool, let's refi. But let's make sure you qualify where rates are right now. Let's take a minute to be thankful that our rates are not as high as conventional. Let's take a minute to be thankful that there's no down payment. And let's take a minute to be thankful that there's no mortgage insurance, because the bottom line is a VA loan is making home ownership more affordable for you. So I hope this video was helpful. Thanks for watching.